Alright, Starship Space Commander, I just don't think that you're locked in, but it really is how it is. Alright, Starship Space Commander, it's very simple, alright? If we break bullish on the daily, whether we have a change of state or break in structure, as such, we have a change of state right here, alright? So that means that we're bullish officially now, but really, the break of structure, that's the official bullish movement, alright? So when we close over that, we were definitely bullish, alright? There's no questions. Now we have a daily low right here, alright, on this day, Wednesday of last week. Alright, and then this Thursday, what do we have? Now that there's this between these wicks, that is a fair value gap. So you should have been paying attention just because we were under this low, let alone the fact that it's a fair value gap. And also, surprise, surprise, dipped in and was an order block as well. So there's a good amount of PD arrays telling you, alright, well, we are bullish and we are performing out the structure. We come over here, we look at your friend over here. Alright, we got your change in state. Got a breaking structure as well. So we definitely bullish. This was 1, 2, 3, 4, 5, 6. We got all these breaking structures. There's a command C. Command C, breaking structure, breaking structure. So we don't have the order block over here, but we do have a fair value gap, and we are bullish, right? So just pay attention how it comes and what it does when it sweeps it slow, alright? Fair value gap could be the sweeped one. Alright, so let's go down to 5 minute. Alright, so this whole day is the day that's forming the fair value gap. So yes, we got to sweep of this high. Yes, I'm sure you could have took a short off of here in some form or whatever and whatnot. That's not the point. Right now we're just looking at the high probability setups. Did we take out the low right here? We took out the low right here. And then do we have a fair value gap? No, we have no fair value gap. We just have a breaker structure, no order block. We come over and look at the friend though. The volatile friend. Alright, so this bin dipped into here and looks pretty good. Notice how ES didn't dip in there though. So we have some discorrelation between the indexes. So do we get a move? Technically we get a fair value gap right here. Fair value gap. We got order blocks right here, breaker structure. You could have took a long off of here, and it would have been your rules. But look, peep structure. Because then we dip into the order block right here. So when NASDAQ dips into the order block, that's telling you, alright, this is official structure for real. Not only that, ES was lagging over here, so ES finally dipped in. So really when they both dipped into the lows is when you really should have been paying attention. But you might have been over monitoring or processing. Notice how this move happened perfectly during the New York session. And here, when you see that this dips into the order block, let's say you took a loss or two, just waiting for the right move. Alright, when you see this dips into this order block, this has a fair value gap right here, 5 minute structure right here. You long. This is ideal. I mean, there's displacement. There's breaking structure. There's order blocks. Put the low between like 50% of the wick, which I know that's going to be around 80 right here. It's 89. Notice how it just dipped under. You might have had some confusion, wondering, alright, these first couple dips had some breaking structures in there. Well, if you don't want to pay attention to the first couple breaks and structures, how about you hire the time frame? Alright, do you see a break and structure clean with the fair value gap here? Well, that fair value gap got rebalanced. This one, I mean, it got inverse on the way down. But yeah, there's a break and structure. But it's like, and then we just want to up the time frame. Well, then, alright, what if that's too much noise on a lower time frame? On a higher time frame, this barely broke structure. This is just rebalancing the equilibrium. As you can see, the range always gets to rebalance. Put it on a 30-minute. Alright, now you really got no noise. There's no breaker structure at all. You see on a 30-minute, it's flowing off of this order block right here. So you got to pay attention. See, it's just consolidating right here. We get no breaker structure. There's no confusion on the 30-minute. But what do we got right here? A clean ass, fat ass fair value gap. And then as well as the order block that's a little bit higher of an entry. So with the lower time frame entry, you would have got that well-defined entry. But let's just say we took a 30-minute structure. Let's change that to an order block. We'd enter right here. And let's say you want to at least get a big figure entry. Alright, you got the 20s right there. Alright, this is a big figure stop loss too. Which is the big figures are the 80s, the 50s, the 20s, and the hundreds. Hundreds, the 20s, the 50s, the 80s. And then it's back to the hundreds. And the 10s and 20s, when your TP is the hundreds, you could expect those to get hit as well, but I need to rewatch that video. Alright. So what we're noticing right now is when we got two clean, when both of the days both sweep the beta rays, and we're not trying to get caught up in the noise, so we're checking the 30-minute higher time frame for more clarity, because we know that the lower time frame comes with a bunch of BS. We should just go back test and see how many of these moves we could only take off the higher time frame, because the higher the time frame is going to be the better the clarity, the more likely we're not going to get caught up on some BS. Alright, and then let's really a 1-to-1 with this is sized up. Modified order, add level. So you want to leave a runner. That's it, this fair value gap right here in OTE. Leave a runner there. Or if you want to go from this, what is this? This is 60, so at least at the 80s. 60s, go back to the next 60, the higher shelf 60. Like right there. You know what I'm saying? Just from big figure to big figure. Get a little bit more bang with the 1-to-1 you should have been totally gnarly with. But so you left a runner. You could have adjusted size. You could have entered off of this motion right here the next day, but this is when it sweeps the daily low. This is when we get in. Honestly, fuck the ratio, because it's the setup and the fact that it swept a daily order block and it's on 30-minute structure, as well as swept a daily low, so daily fair value gap / order blocks being hit. Doesn't matter how good the risk to reward is, because that's going to be money in your pocket. Doesn't matter if it's a 1-to-1, 2-to-1, 3-to-1, 4-to-1. It's the fact that it's very highly likely to happen and go down well. Now, if you want to pull out your Fibonacci, just so you can try to say, all right, let me get a deep exit out in this range. Highest point is right here. That's the deepest part of this range, and the 900s line up with that. You really never know. It really doesn't matter at this point. It's the fact that you got the entry right and you got the 1-to-1, and then you moved your stop up to break even probably after the 1-to-1, because that's probably the most you were going to get out of this move. Just because it was so wide at a 1-to-1, you wouldn't expect it to come back down. Alright, same thing over here though. When the structure is way worse over here though. I'm not gonna lie. Structure was way cleaner over there, so we would have took this over there if it was a live account though. Because if not, then on some prop firm, we would have had to close the position between here. We would have had to re-enter right here, or we would have had to re-enter on this retracement move. So let's say we just re-entered on a long that day. It's going with the daily order flow. Assuming that our draw is, I guess, the previous day's high now, or something like that. You know what, really you just gotta get the entry. I'm not gonna lie, just buying the entry. We wouldn't have been able to take this if it was a prop firm. We would have got stopped out, or would have had to re-enter. So on to the next point. We're just looking at the high probability setups. Yes, we could enter on a Fibonacci retracement, 5-minute breaker structure, or Fibonacci just alone, order block, doesn't matter. Alright, same story. We got a daily fair value gap. Got a down close candle which acts as a order block. So the main thing is that we swept the daily low, right? Daily structure is all you should be paying attention to. If it's not daily involved, then you're choosing to be in the little leagues. So we swept this daily low. No, we don't have a fair value gap over here, but we did sweep a daily low. And what is the algorithm? We sweep a daily low, and it's in correspondence with the higher time frame as well as this down close candle too. Then we probably gotta move. All right. Breaker structure, and then those were like the latest moves. Then we have an SMT divergence we're gonna get at the end. That currently is working out. Already got a 1-to-1. Can move the stop up to break even, but we don't take counter turn trades. But the only reason we took that one is because we noticed that the Dow already had a change of state, and it was already respecting a bearish fair value gap, and closed bearish. So it's like the Dow is already turning around. All 30 of those companies are in the SP 500. SP 500 and NASDAQ, and like 8 to 13, 7 to 13 of those companies are in the NASDAQ. So they're all correlated very heavily. So it's like, alright, breaker structure has come down onto a lower time frame. Same thing over here, same move. Alright, so the first time that we attacked this daily low was right here. Did we get a 5-minute displacement? No, we got this consolidation right here. Same over here. It's just very simple. It's nothing complicated, bro. If we're bullish and we sweep a daily low, we're looking for long. If we're bearish on the daily and we sweep a daily high, we're looking for shorts, yo. It's very simple. There's our sweeps line. Alright, so first time we dipped into it was right here. And could we have caught a fake move? Possibly, but did we notice that our friend over here didn't dip in? So now we're kind of noticing when one dips in and the other one doesn't dip in, it's kind of like, is the move going to be actually ready? So then we come over here, check the 30, just to make sure that we got no confusion. This definitely dipped in and swept that. This fair value gap being representative of sweeps. Let's pull this label it. Right. Alright, save this as sweeps. I might as well just change these all to the same color because it's just supposed to show the yellow stands for a sweep in liquidity. It's going to sweep the area and turn around in those areas. Same with the line, same when it's a fair value gap. And then there should be one for just changing direction. We got change of states and we got breaker structure. Two different forms of changing direction. Alright, so right here we dip in. We don't dip in on ES. So let's say we would have longed off here. Boom. We got clean structure. We got a fair value gap. And it's on the 30-minute time frame too. So it's like, honestly, fortunately in this scenario we would have got a 1-to-1 and we wouldn't have lost any money. We would have dipped in there, boom, and then we would have came back down and we would have got hit at break even if we left the runner to go up here. But then when we notice that we sweep the fair value gap and we dip into this daily order block, it gives us, alright, let's re-enter. Not only that, our friend over here is acting out with the algorithm quite well too, and it's during the PM session. So maybe we would have got a 1-to-1 on that, maybe not. Maybe we should say that if we don't sweep on the NAS and we don't sweep on ES, we can target a 1-to-1. But if they don't both sweep, then we cannot target an explosive move because they both need to be in correlation possibly. Alright, the only time that they should be diverging is when it's a reversal. It's not going to be I don't think it's going to be an SMT is going to be it's just going to continue going up because that's not a reversal. They're both going for a sweep in liquidity and they're both going up to target the next draw. But when they get to the next draw, which is another form of sweep in liquidity, and only one of them sweeps it and the other one doesn't, but it's bullish, so now we're having a bearish divergence. Now that would make sense, but we'll see in time to come. So we got the 5-minute breaker structure right here. Just clean 2022 model. If you entered off that fair value gap right there, that small one right here, goat it. If not, you can look at the 5-minute structure over here. We got a fair value gap and an order block. Honestly, does that look even better over there? Oh, that's 30-minute structure. So yeah, 30-minute structure looks very clean over here. So we could have kicked it on both moves with 30-minute structure. Maybe we should only take 30-minute structure because I think that it's gonna probably hold up over time. So I'm gonna start backtesting everything that I just backtested, but only 30-minute structure. Because the higher the time frame, the less noise we got to deal with in between. So we got a fair value gap touching this order block. Could we enter big figure? Big figure's a little deep. It's right on the order block. It's not about number crunching, it's a flow. Same thing here. Take a 1-to-1. Risk is off the table. Now let's target our previous sessions. We got New York session right here. That would have been good for me. We got another New York session. Boom. That would have been, we got this, you know what I'm saying? A little bankroll. Alright. Then we had an SMT divergence though. So we had seen that Nasdaq with the clean 30-minute structure took out these sessions. And then ES over here on the other hand, this is how I was looking at an ES because I'm been gauging ES more because traded with a smaller account, lose a lot less money. Alright, fair value gap, buy. This 5-minute structure is also present on Nasdaq. 67. Alright, then boom, you already got a 1-to-1. But just what is this? This is when both of them swept the daily low. Not when one of them swept the daily low, when both of them. And then one was showing choppy direction. Well, for one, they didn't both sweep, so if it wants to be choppy, it can be choppy. But then notice that when you clean it up on the 30-minute, the action just looks way cleaner. So maybe just only take 30-minute moves. This, we could really just target the equilibrium because we're entering on the 5-minute. But it is very simple. When we're bullish, we're sweeping daily lows, and then we're looking for some PD array that shows that the market's reversing. Shows the breaker structure, pull back to a fair value gap in equilibrium, or a breaking structure, pull back to a order block that's paired with the fair value gap, or even better, a breaker structure, then a pullback to equilibrium to where there's a fair value gap paired with an order block, which is the ideal. And even hotter, Fibonacci, order block, fair value gap, sweep of liquidity on higher time frame correspondence. And then just some extra sauce today. So let's not forget that they're triplets, alright? Everyone wants to pay attention to ES and Dow, alright? It's probably too much for most to handle. I get it too. Just pass me ES and NQ. I don't want to look at everything. I don't want to be just so conscious and so aware of the sentiment. But honestly, this daily black candle closed under this opening bullish candle, which is a change in state. Then the next day left a fair value gap. So when we had this fair value gap, then we came in here and we wicked this, and then we closed, and like low key we closed bearish too. So we had a change in state, a bearish fair value gap. Just respect it. This big ass doji right here showing sellers pushing the price down, and it closed past this breaker structure. This low, very clean, which is the breaker structure, which is given a sense of reversal. So when I saw earlier in when I saw that that's practically turn around, correct? Alright, then we come over here on the daily, and I'm already looking at how much fair value gaps there are on the daily. We just had this explosive range. So it's like we're probably going to want to pull back to at least the equilibrium and knock out this fair value gap or something, right? So then I notice we have an SMT divergence right here, whereas ES failed to sweep the Wednesday, August 12th, failed to sweep Tuesday, August 11th. But over here we swept it already. So we have the Dow saying it wants to turn around. We have an SMT divergence on the daily, which the daily is the only time frame I pay attention to now. So, and then we come over here into the 5-minute. And what do we have as there's an SMT divergence? We have a breaker structure, pull back into this order block, fair value gap right here. You could have entered equilibrium or the fair value gap. It really doesn't matter. Got a 1-to-1. But since I noticed that, so I'm debating on if I want to take the SMT that sweeps or the SMT that fails to sweep. Because I know when you take the one that fails to sweep, the one that's failing to sweep is showing that it has more sellers in it. That it's more bearish, that it's a heavier asset because it's failing to get to the highs. But I took it over in the NASDAQ, and I got a 1-to-1 at like 170. So whenever this level got hit earlier today, so right here, got a 1-to-1. Had to deal with some withdrawal back to break even. And now I'm targeting the New York session lows, and I'm just rounded it to this big figure. So we're going to see if that plays out. If that plays out, this was a counter trend. This isn't supposed to be the type of setup I take, but I saw the breaker structure, the fair value gap, the order block, and the SMT divergence on the daily. as well as with the Dow already turning around. So I figured, all right, these markets are about to catch up with the Dow now. So maybe the average that was holding up the rest of the 93 or 87 to 93 stocks was making Nasdaq lag with the Dow, and the other 70 stocks and the SP 500 was probably keeping that up. But when the Dow, those main 30 that are in, all in the ES and a couple of them in Nasdaq was already dropping because it's less of them, so it's showing these companies are already dropping, but these index haven't dropped yet because there's being averaged out with other companies. So this might hit this, but this honestly, you see this big ass wick. You should just the fact that it hasn't had a change in state on itself. Dow had a change in state, but Nasdaq didn't have a change in state. I don't think, nor do I think ES had a change in state, let alone a break in structure for sure, though. Definitely did not go down. No, there was no change in states, and there was no break in structure bearish. The only thing I'm basing this really off of, yeah, we got the Dow turnaround, is the SMT divergence, which means that this is a counter trend. So why would you try to get an explosive projection off of a counter trend when you know 86.2% of the time, at least for the month of July, that you're going to get a 1-to-1? So if you're going to take a counter trend, just take the 1-to-1. So really, close the position now just on some good psychology. Yeah, it's going to linger or move it up to break even, but really you should be fine with what you have here. You should not allow yourself to take any loss, though. So go ahead and get the loss out of the way. There's no losses happening. We're going to be at break even regardless, and actually we're going to have one contract locked in too. That's how you got to be thinking, and that's how you got to be coming. Because if you're going counter trend, you're putting the odds against you. But yes, I know you want to submit to an algorithm and a PD array, so there you go. But really, you should close this position already. So why aren't you closing this already? Because you want to just see. But yeah, there's a good chance it would do that. But in good practice, if this is a counter trend, you should go ahead and close the position so you got a successful 1-to-1 on a counter trend. Alright? Talking about you just want to see. Put the shit in your pocket. Wait for the actual move. You shouldn't have even taken that move. Alright? But now you're playing with luck.